Welcome to the hottest real estate topics on the planet, keeping you up to date with all the creative ways to buy and sell real estate without bank qualifying, so anyone can build real income starting today. Here is another great show with Dealmaker Bill and Pete the Rookie.
All right, here we are at another episode of Flipping Houses for Rookies. Are you awake, Peter, after that?
That woke me up, Bill.
Episode number 114.
That's a good number.
Yeah. So today's show name is 30-Minute Talk on where to get money to buy real estate.
In 30 minutes.
We're going to actually do a 30-minute podcast.
Okay, and your mark,
Get set,
go.
Description. If you want or need to put money together to buy real estate as soon as possible, this podcast is for you.
Yay.
Ever thought you wanted to flip real estate so you can make money in less time, but hit the barrier of where to get the money?
Oh, damn.
This 30-minute episode will describe to you how anyone can do it, even Peter, with your 10-year-old's daughter credit score.
Which is 0.
Give us 30 minutes of uninterrupted attention without distractions, and we will share with you how to get all the money you will ever need in real estate.
For real?
Yeah. Well, you know, because we do it all the time. You're just playing the rookie.
It's my job.
Yeah. All right.
Color.
So here we go. Ready?
Yeah.
So we got to do it again. What'd you say? On your mark, get set,
go. Number 1.
Yeah. So there's 3 ways, only 3 ways ever to fund a real estate transaction. Only 3 ways that I know of. Now, if there's more, it's because they're completely weird and they're not used a lot. They're not mainstream. Okay? So I'm going to give you those 3, and then we're going to talk about each one of them over the 30-minute time. Okay? So the 3 ways are go to the bank. When I mean the bank, I'm talking about, like Chase Manhattan, or give me some other American.
Wells Fargo.
Bank
of America.
Yeah, Bank of America.
Quicken
That's what I
Loans.
was thinking, yeah. So that's
Rocket.
Go to the bank. Get the money. Okay? The second way is private money or hard money.
Mm-hmm.
Okay? Which is not bank controlled.
Right.
Okay? And then the third way, which is what you and I specialize in, is getting the money from your buyer. And most people do not know about that or think about that or even consider that, which, by the way, is the absolute secret on how you can buy real estate without a loan. And it's not that it's a secret, because if you understand it, it makes total sense. It's not like we're trying to hide it from you. It's a secret because if you do that, it bucks against the entire real estate system as it is today. Because if you think about it, when you go to a closing, the realtor brings the buyer. The banker brings the money. The attorney brings the paperwork. The insurance guy brings the protection, and the title guy makes sure the future you don't get sued for passing a bad title.
Mm-hmm.
Each one of those individuals gets paid a fee for being at the closing table. It's the only reason why they're there. So think of this. If you and I do a real estate transaction, me being the seller, you being the buyer.
Just between us?
Right.
Oh.
Would they get all their fees?
Oh, no.
I have done hundreds of deals. You know that.
Yeah.
I mean, you could look at my filing cabinets. We talk about them. We drive by houses. You see, I mean, I've done hundreds of deals.
Yeah, you drive by a house. Like, I own that one. I used to own that one.
Right. For the first, I want to say 10 years of my real estate career, I did not use an attorney. I did not use a bank. I did not use closing agents. I did it 100% myself. And most people don't understand that you can do that. Now, in today's environment, It's best to use some closing agents because there are some radical people out there now that, might say things like you didn't tell me this, or you didn't tell me that, or I didn't know I was signing documents for a lease, or I didn't know. So nowadays we have them come to my attorney's office and we do documents there just because it's better show and tell than doing it in their kitchen.
Mm-hmm. Yeah.
But I still do tabletop closings in the kitchen. My point in this is that you do not need to use the real estate system to buy and sell a house ever.
Well, if you think about it, why can't one person sell another person something? You can buy a car from somebody, you can buy a guitar, you can buy a chicken, you can buy eggs. So why do you have to have somebody else give you permission to buy and sell a house if you do it right?
Exactly. However, based on what you just said, the most amazing thing that blew me away, which is the reason why I'm 15 years into it and hundreds of deals, is for this exact piece of information. You sell a car with a lien on it, you have to pay the lien off before you can pass title.
Mm-hmm.
And I was in the car business for 25 years, so this is why it was so amazing to me, because I would have to pay off liens to get a clean title before I could sell the car to my next buyer.
Right, free and clear. No attachments.
With real estate, you can pass a title with the lien attached to it.
Mm-hmm.
You do not have to pay off the mortgage to pass a title. So if I own a piece of property with a $100,000 mortgage on it, I can sign you the deed. Okay?
Yeah.
And you can own the house. Now, yes, the mortgage is still in my name, but if we do the correct paperwork and do the process correctly, you will also assume that mortgage. And they say that you can't assume mortgages. Well, we're not really technically assuming it, but just for a ways of our listeners to understand it, you can do that. There are ways where I can give you the deed to my house,
Mm-hmm.
and you can actually take over the mortgage payments, be responsible for the house, have all the water bills, the tax bills, everything come to you, insurance in your name every way, and not need a realtor, not need an attorney or a closing agent, not need a bank. And I have done, I don't even know how many, dozens and dozens and dozens. My first 40 deals were done that way. Okay?
Sure. Well, we're doing one right now. Same way.
Right. Okay, so just realize that when we get into the third part here, that's the magic. And that's the area that most people don't talk about, because if the realtor, if the banker, if the attorney, and the insurance guy's not going away. But if those three people let us continuously talk about how we didn't need their services, it would disturb their system and their income. So this is the reason why it's a secret, is because the money guys can't make money unless they keep it under wraps.
So they're not telling anyone.
Right.
There's no reason for them to.
I don't think it's like malice of forethought.
No, but why would they?
Right.
There's no reason to.
Right.
They're just doing their job.
Right.
But we can do our job, can't we?
Right. Okay. So the first way that you buy a house is with a bank. That's the first way we're going to talk about. So that's the most common way. That's what most people think of when they say, I want to buy real estate. They say, I don't have money or I don't have credit. Okay. Now, I'm going to talk about a deal I'm doing with my daughter. I hope she doesn't get frustrated with me because I'm going to talk about her. She's usually on the podcast, but hopefully today she will understand. So I have a 2-family house that she is buying from me because she would like to have the real estate strategy of buying and holding multifamily houses. She's young. She's in her mid-20s, so she has time on her side. She has a job. Her husband has a job. They have a baby, a new house. They're a young couple. So the idea of them purchasing real estate and having positive cash flow, because I have structured this deal for her, and it is a very sweet deal for her. It's got like $1,000 a month positive cash flow. So what better thing to have in your mid-20s than already owning your home, already having cars and everything that they want, having a baby and wanting another, than to have $1,000 a month positive cash flow. Matter of fact, the reason why she is buying this house is because she is definitely her dad's daughter, and she has college loans that have just excelled, and she was kind of complaining to me about those college loans and how it was eating into her income significantly, because the college loans are as much as a mortgage. And I suggested that she did not have enough assets to pay for her liabilities. And that's how that conversation started.
Mm-hmm.
Okay?
Yep.
It's just a Kiyosaki thing. You know, if you read Cash Flow Quadrant and Rich Dad, Poor Dad, you will understand that's where I got the information. It's not information that I made up. It's not like I grew up and all of a sudden I became this genius. I just implemented some information that I believe to be correct. Okay?
So she has some capital working for her, making her some money.
Right. That's the idea. However, getting from here to there, I will tell you overtly that she would not be able to buy this house without me, because the bank is putting her through the ringer. First of all, she was told at first 30% down. Because,
30?
Because it's an investment piece of property. They're not living in it. So the FHA mortgages and government assist, because FHA is a government-assisted mortgage, the government-assisted mortgages do not work for a residence that you don't live in. So they have specific, very difficult rules on how you borrow money.
Wow, 30%.
And the reason why is because you could easily walk away from it. Mm-hmm. Right? If you're living in it, you have no place to go. It's a little bit harder, or they hope that it's a difficult decision because, like, where do I live?
Yeah.
Right.
Okay. 30%.
So when there's an investment property, it's easier for them to walk away. So I turned around to one of my mortgage guys. I had a conversation with him. We kind of chatted a little bit. I do meetups. You know, like I go to meetup.com and I go to like local meetings. I do BNI groups. It's a great way, by the way, to find money, and it's also a great way to find insurance guys. It's a great way to find realtors. It's a great way to find contractors, is to circulate through these meetings, which is how we have probably found half of our dream team, is just circulating through these networking meetings. They're usually early in the morning. You have to be ambitious to go to a 7 a.m. meeting, especially when you work till 11 or 12 o'clock the night before. But it works. Okay. So I have a mortgage guy that I chatted with at one of my meetups, and we kind of formulated like a kind of half a plan, and I proposed it to Jesse. We found a mortgage company that will allow 15% down.
Oh.
The reason why she's able to buy the property and do what we're doing is because she's going to actually use retirement money for the deposit. We are going to close, and then after we close, I will give her some money back.
Mm-hmm.
And if I was not her father, she wouldn't trust me to do that. So we completely got creative on a bank deal. But if that was not the case, where she could be creative with the owner, I don't think she could buy this house.
Right.
Okay. Which brings me to another point. When I bought this house, I mean, I bought it because I was blinded by the price. It was like 40 cents on a dollar, and it did need a lot of work. Okay. What I didn't realize, or what I wasn't thinking, I was blinded by the profit, my greed glands. What I wasn't thinking is when it was time for me to sell, that I was going to have, that I didn't even realize that I was going to have these barriers, right? Because I would need to find somebody like Jesse or somebody even more qualified that would have 20 or 30% down.
Mm-hmm.
Now, it's not a problem because I didn't even put it on the market, and I'm sure I can get through all of that. I have no doubts about that at all. But my point is that it restricted my potential for a buyer.
Because it's a two-family?
Because of the investment aspect and the banking regulations, or the banking requirements, I should say, not the regulations,
right,
that they would need 20% down. So now I would need to find that needle in a haystack, because it's not like a regular house. You put it on the market, and if there's 1,000 people on a market looking for a house, you have 1,000 prospects.
Mm-hmm.
In this particular case, out of the 1,000, we might have 50 that have the 30% down, 20% down, and can qualify with credit.
Could someone live in the house?
Yes.
And get the cheaper mortgage?
Yes.
Like buy it as an investment, but live in it and rent the upstairs. That one of those type of things.
Yeah,
okay.
I believe so.
Okay. Because people do that too.
Right.
Okay.
So that's all my point is that
there's more than one way to handle the situation.
right. So the way she's going to make money, obviously, is with the cash flow, because there's really only two ways to make money with real estate. That's with the equity, buy low, sell high, or with the cash flow. Those are the only two ways to make money with real estate. Okay. So she's fortunate because she's getting both. If it wasn't my daughter, she wouldn't have equity. But I'm giving her equity.
Mm-hmm.
Literally giving it to her.
Well, Bill, you give it to her now or you give it to her later.
Yeah, exactly. Exactly. Plus, she's getting cash flow.
Mm-hmm.
Okay. The point is that with the bank, they are very, very conservative. They are worried about getting their original investment back. And they make sure that they go through their process of due diligence to make sure they're protected.
Mm-hmm.
It is the hardest way to get money. Absolutely the hardest way. And it's because the institution, which we call it in the office institutional lending,
Mm-hmm.
and it's actually, for us, it's a institution means like the psych institution, right? So it's institutional lending, but it's a play on words because it really means that they're an entity that is big, and it's in the business it's called institutional lending, meaning that they're a big entity,
Mm-hmm.
right? For you and I, it means that they're insane.
It means it's crazy.
All right.
Yep.
Number two. So have I done a good job making that clear? I mean, I think a lot of people know that.
Yeah, people know mostly how that works. That 30% thing as an investment, I didn't realize that.
Right.
Makes sense they would do that.
Right. Well, some banks could do 20. The particular bank we found. Oh, by the way, and we're going to talk about this in a minute. We're going to talk about this in this next section, so I don't want to diverse too much. The reason why she got 15% down is because they went from a 5.5% rate to like a 7 or 7.5% rate.
Oh.
So by taking less down payment, they got more interest.
Negotiating.
Right.
Something goes up, something goes down.
Right.
Okay.
So we're going to talk about that in a second. Okay. All right. So the next section that we're going to talk about is private money and hard money.
Okay.
So first thing I want to cover is what's the difference. Okay. So hard money is one step down from the bank.
Mm-hmm.
Basically what it is somebody has a checkbook full of money or access to money, and he wants to be like the bank but doesn't need to be regulated with banking rules because it's his money.
Mm-hmm. Okay.
Okay. So if I had $100,000 and I wanted to lend it to you to buy a house, that could be considered hard money for this reason. The difference between hard money and private money. Hard money always, almost always, but always has points. So basically what happens is if I'm going to lend you money and I'm going to charge you, say, 13% or 12%, let's say 12%, which would be 1% per month. It's easy math that way.
Yeah.
If I were to lend you 12%,
Mm-hmm.
that is what they call an APR, annual percentage rating. In other words,
Sure.
I only get my 12% as the lender if you go the full year.
Mm-hmm.
If I sell that house, if you sell that house, right, in a 6-month period, I don't get 12% because it's annual percentage rating. It's 1% per month. In this case, I only got 6%.
Mm-hmm.
Okay.
But it only took you 6 months. Don't
It only
complain
took
too
me
much.
6 months, right?
Oh.
So the point is that the way I make sure that I get enough return is I put points on there. And points are another way of saying interest. The difference is points get paid immediately. Interest needs time. It needs to be done over time.
So if I borrowed $100,000 and there are 3 points, I only get 97,000 because I have to get it's maybe paperwork, but I'm paying on 100 and only getting 97, and the hard money guy just keeps his own $3,000.
Exactly.
Okay.
But I owe you 100.
Sure.
Or however it works.
Shylock.
Yeah, Shylock. The reason why you do that is because the only way that you could, by banking laws, actually get interest is you need to let the person that you're lending the money use the money, which is, by the way, why mortgages, when you get a new mortgage, why they give you 30 to 45 days to make your first payment.
Oh, because you have to use the money before you pay on it.
Right.
Because the service is the money, not the privilege. It's the money. So you don't pay in the beginning because you didn't get anything yet.
The way interest is written is on a per diem basis. In other words, per day, it's some percentage for letting you use it. Right? So, I mean, it's a joke. I mean it as a joke, but it's not really a joke in some people's worlds. I mean, that's why the mob is criticized so much, because, you might lend me $10,000 and I have to pay you back $12,000 by tomorrow.
Mm-hmm.
It's because I used your $10,000. They don't care what I did with the $10,000. They want their $12,000 back.
Mm-hmm.
Okay, so that's a hyper way of explaining how it works.
And those are risky loans, so they have to charge a little more, being Italian.
Exactly.
It's all fair.
So hard money, to me, means that you're paying points. And the points mean that they don't have to wait the time to get the interest. Okay, so, but it's still, when you calculate it, it's still done in interest. So if it's 3 points, it's 3% of whatever money you're borrowing, but it's due now.
Yeah,
it doesn't need.
They take it off the top.
Yeah, it doesn't need the time to be collected,
right?
Like interest does.
And the hard money guys are actually organized with like a name, an office. They're organized as a little business, right? And there's no actual regulations have to follow, or there's some.
Not that I'm aware of, but they're not a banking institution.
No.
They can just lend money and kind of make their own rules. They have to be legal about it, and they use lawyers and accountants and all that kind of stuff.
Yeah. Okay.
A private money lender doesn't usually charge points. So, other than the points being charged, I have found that hard money lenders, like you just said, are like businesses.
Mm-hmm.
It's like they make a living doing this.
Mm-hmm. They have a name to the business.
They're like looking at, I got $500,000. How much is it making me per year as an overall percentage?
Yeah.
And they count on that income for their for whatever they do, their living expenses.
Mm-hmm.
Okay.
Well, they could invest it in things, stocks, and see what they might get, or they can lend it to people directly and just charge the interest and know what they're getting back.
So most hard money lenders, like you say, are businesses. Now, private money lenders are usually somebody that has money, and I want to make sure we spend at least a couple minutes on this, although we're getting a little bit short on time. We're 23 minutes in. Private money usually means somebody has access to money and doesn't charge points. Now, my private lenders, I pay them 7 and 9%, okay? And there's no points. However, this is a whole topic by itself. Most of my lenders are private lenders that will use IRA money or 401k money or retirement money. It's called self-directed IRA, which means that if you have money in retirement money, you can tell the fund that you own where to invest it. Mm-hmm. And there are specific ways to do that, and it's a much higher rate of return. Okay? I have a few friends that tell me that their retirement money makes 10 and 12%. I don't believe it, because most people tell me they make 5, 6, 7%. 7% is a good year. So when I come along and offer 9%, it's much better for them because the funds are using stocks, which are not as secure as real estate. So if you take $100,000 out of your IRA or out of your retirement fund and put it in real estate, it's much more secure than if you put it into a piece of paper, which is a stock. Okay, a stock is usually some confidence that somebody's going to run their business correctly. So a news media could change a company by bad mouthing them,
Yeah.
or somebody, a CEO could quit, or there's so many variables on whether or not that company is going to sustain a profit. Whereas with real estate, of course, with real estate, the market could go down, but it always comes back up.
Well, everybody needs a place to live, so
And that too.
it's got to come back.
Right. So private money is somebody that could have money in their checkbook, have money in a savings account. They could have credit in their house, equity in their house, and get a home line of credit. I have plenty of coaching students to do that. They have family members that have houses free and clear, and they'll go get a line of credit for $150,000 and lend money that way. You borrow. We just did it with a house that we're closing on today from you.
Yeah.
It's you pay 3 or 4% to borrow the money, or 2%. I think it's 2%, right?
Well, they're around 4.
Yeah. So 4% to borrow the money, and then you lend it for 9%. So you make 5%. Like in your particular case, I think we used $40,000 or something. You're getting back $1,300 or $1,500. That's pretty much free money.
Yeah.
Right. I mean, it's safe. It was just like, anyways.
Well, I would have had to pay somebody else more to borrow from somebody else.
Right.
So I might as well use my own money.
Right. Okay. So that is definitely a way to do it. Okay. So when we talk about private money, all that kind of stuff, these guys are the last point I want to make here. These guys are not they're asset lenders. In other words, the qualification is the asset. So they lend money based on the percentages of the house. Most of them don't go above 70%. So if the house is worth $100,000, they don't lend past 70%. The reason why is because if they take the house back, they know they can get their money back. Okay, so the first thing a private lender or a hard money lender always wants to know is they want the confidence that they're going to get their money back, their original investment.
Yeah, it's not the interest, how much they're going to make.
Right.
That's less than what they handed you, so they want to make sure they get that back first.
Right.
That's a bigger amount.
Right.
And then on top of that would be extra, but geez,
Right.
they want their money back.
And then depending on how risky they think it is how much interest they charge. That's why hard money lenders charge so much interest, because they want you to believe that it's really risky for them. But it's not. It's in their own mind. Okay? All right, let's move on to the last one, which is what we're really good at. You and I are really good at, and that's what a terms deal is. What that means, terms deal, is you find a seller that's willing to let you make payments until you can pay them off.
So over time. So terms mean time in this case.
Yes.
Time.
So yeah.
Time payments.
Yes. Okay.
Cool.
So what you don't hear a lot about, and we're not going to spend a lot of time with it here because we've talked about this for many, many times. I'm going to give you a place to go get information in a couple minutes, so you should grab a paper and pencil if you need it. What most investors don't realize is that 81% of the buyers in any real estate market do not qualify for a mortgage. So that means 19% does. We just talked about that most of this show is like, how are you going to sell? You're going to sell to the person that qualifies for a mortgage. And you're going to pay back your bank, or you're going to pay back your private lender or hard money lender. Those are usually short-term loans, usually within 12 months, if you're flipping houses. However, what about the pretty houses that don't need repair, where a seller will actually let you make monthly payments, whether it be owner financing, whether it be leasing, whether it be you lease, or whether you put your buyer and seller together and the buyer leases directly to your seller. Okay, so the three ways I just said is you do owner financing with you, or the seller does owner financing with you. The buyer, I'm confusing this. I'm going to do it again. The owner does owner financing with you. Or the seller will lease to you, and then you turn around and sublease it to somebody else, and you stay in the middle. Or maybe sometimes a deal is too skinny, and you just take a fee and you lease the property with your buyer and your seller and don't stay in.
Mm-hmm.
The point is, in all those scenarios, your buyer is funding the deal. And that's why you don't need credit. That's why your 10-year-old daughter can do it, which, by the way, my daughter has done that because I had houses in her name before she was old enough to sign her name, okay, which is kind of a joke, but it was true, okay?
Yeah, she's in her teens.
Yeah, in her teenage. Yeah, she in her teens. She was owner of properties, and she would just sign documents, and there you go, okay? So you don't need any credit. You don't need anything. What you need to do is you need to know how to find those sellers that are willing to let you pay them monthly so they can pay their expenses until you can get your buyer in there and qualified. Now, sometimes it could be done in 2 years. Sometimes it's 5 years. Sometimes it's 7 years. Sometimes it's 10 years. When we do, like we talked about earlier, and we take over a mortgage payment, sometimes I'll get 20 or 30 years to pay off a mortgage with no time constraints.
Yeah, if there's not a lot of equity in the house, the person has nothing to gain by cashing out at some point.
Right.
So just having the bill paid, they're out of their problem of the expense of the house, and they can move on.
Right.
So it doesn't matter if it's 1 year, 2 years, or 20.
Right. So the intention of this 30-minute talk, because we're at 30 minutes now, the intention of this 30-minute talk is to get you to understand that there is a whole industry and a whole bunch of very easy to learn information on how to find a seller that will sell to you on time and a buyer that would use that time and make those payments. And there's a whole industry on that, and that is how to buy real estate without a loan. Because you're using your buyer's money to purchase the property, and your seller is giving you enough time to do that. It is absolutely an entire industry, and I want to be very clear that that is exactly what you and I specialize in. That's exactly what I teach. I do the other deals because they come my way. But we are absolute specialists in finding the seller that will allow us to make payments that we can pay them off. And we're even more of a specialist on finding buyers that will meet those obligations and make everybody happy.
And there's lots of them. You'd be surprised. It's 81%. A lot of them.
Yeah. 81% of the market wants
And a lot of
to
them
do this.
are good. Well, they'll fill out an application, and it'll be good.
Right.
They'll be trustworthy and, probably work out.
So I hope that we were very clear on the 3 ways that you can get money. I hope that we've opened your eyes up to that buying money without a real estate loan is extremely, extremely, extremely doable. I'm dropping a bomb here at the end, but a lot of times we don't even buy houses; we just control it with paper, right? I don't know who I read it from originally, but sometimes it's best to not own anything and control all of it.
Wouldn't that be best of all worlds?
Right. And doing what we're talking about does exactly that. Especially with a lease, with a purchase to buy, you're controlling the property. You never had the responsibilities of you have some responsibilities, but you can walk away anytime you want. So there's absolutely no risk. There's absolutely no money, no credit for real if you understand and study how to find your buyer to pay your loaner's debt. Okay, so if you want more information and want to know how we do this, go to flippinghousesforrookies.com. That is flippinghousesforrookies.com, and I will walk you through how to do this. I have a bunch of tools there. I have a lot of podcasts and videos and explanations. We have live meetings. We have a bunch of ways that you can learn how to do this, in most cases for free. At least understand the concept. And then when it's time for you to dig in and get your own deal, we're there to help you. Okay? So thanks for listening. Over and out.
Thanks for tuning in to the hottest real estate topics on the planet with Bill and Pete. If you want to continue learning how to buy and sell real estate without money or credit, head over to flippinghouses.club for some cutting-edge real estate wealth tools. Or contact us at info@flippinghouses.club.